Over the past 4 decades, China transformed itself from a poor agrarian economy into the world's factory. The turning point came in 1978 when Deng Xiaoping introduced economic reforms that opened China to foreign investment and global trade. Instead of relying on strict state control, China created special economic zones, or SEZs, in cities like Shenzhen, offering tax breaks, cheap land, and relaxed regulations to attract foreign companies. Western firms rushed in to take advantage of low labor costs, and China quickly became a global production hub. One major advantage China built was massive scale. It didn't just manufacture products, it built entire industrial ecosystems. For example, in electronics manufacturing, suppliers of chips, screens, batteries, packaging, and assembly lines are often located within the same region. This cluster system reduces costs, speeds up production, and allows rapid innovation. If a company needs a design change, factories can adjust within days. This flexibility gave China a strong edge over competitors. Another key factor was infrastructure investment. China built thousands of kilometers of highways, high-speed rail, megaports, and power plants. Ports like Shanghai became some of the busiest in the world. Efficient logistics meant goods could move quickly from factory to ship, reducing delivery times and costs. At the same time, the government heavily invested in technical education, producing millions of engineers and skilled workers each year. Government strategy also played a big role. Through policies like Made in China 2025, China aimed to move beyond low-cost goods and dominate high-tech industries, such as robotics, electric vehicles, semiconductors, and renewable energy. Companies like BYD in electric vehicles and Huawei in telecommunications show how China climbed from simple assembly work to advanced technology production. Globalization further strengthened China's position. After joining the World Trade Organization in 2001, China gained easier access to global markets. Foreign companies outsourced production to China to reduce costs, which increased exports and helped China accumulate massive foreign exchange reserves. Over time, China reinvested these earnings into upgrading technology and expanding manufacturing capacity. However, China's success is not just about cheap labor anymore. Wages have risen significantly, but China remains dominant because of its supply chain efficiency, automation, domestic market size, and government coordination. Today, China is not only manufacturing for the world, it is increasingly innovating for the world. In simple terms, China won manufacturing by